Imagine an invisible cage we all live in. It's not made of steel bars, but of paper and faith. This delicate scaffolding of trust governs every transaction, every dream, every balance of global power, and it is about to break. Beneath the surface of stability, in the quiet halls of central banks and the coding rooms of digital architects, a fundamental re-engineering of our financial world is underway. This isn't just another crisis. This is the final evolution of money itself. This is the global financial reset that could eliminate traditional money as we know it. It's the moment when the cash in your wallet, the numbers in your bank account, and the very idea of a private anonymous exchange become obsolete. The stakes are everything: your savings, your sovereignty, your future. For 1,000 years, the power of money lay in its physical presence, the shine of gold, the promise on a banknote. For the last 50 years, it has been an agreement, a fiat promise backed by governments, a promise that is now buckling under the weight of unimaginable debt and unchecked digital acceleration. The architects of this reset don't see a crisis, they see an opportunity to introduce a new form of currency that offers speed and efficiency but demands an unprecedented surrender of your financial privacy and individual liberty. The move is subtle, masked by the language of progress, modernization, security, inclusion, but the result will be a chasm between the world we know and the world we are entering. We are standing at the edge of the financial singularity, the point of no return where the digital ledger becomes the ultimate source of truth, and cash, the relic of a free past, disappears. Are you prepared for what comes next? Let's rewind. The year is 1971. A seismic event happens, not in geology, but in global finance. President Nixon announces the temporary suspension of the US dollar's convertibility to gold. It was a temporary measure that became permanent, shattering the last great anchor of global currency. In that instant, the world moved fully into the era of fiat money currency, backed by nothing more than the promise and perceived stability of its issuing government. This was the moment the global financial system traded tangible value for limitless flexibility. For decades, the system thrived on a massive credit expansion, a debt addiction fueled by the power of the US dollar as the world's reserve currency. But every addiction has a breaking point. We are living in that moment now. The total global debt sovereign, corporate and private, has climbed to heights that defy rational repayment. Financial historian Dr. Evelyn Reed, who has spent her career tracking the rise and fall of empires, calls it the Great Unwind. She argues the current system is mathematically insolvent. Imagine a dam, cracked and leaking, holding back the weight of a century of borrowed prosperity. The cracks are the recurring bubbles, the dot-com collapse, the 2008 housing crisis, the unending sovereign debt scares. Each one was patched, not fixed, buying just a little more time. Now, the solution proposed by the very institutions that perpetuated the debt, the central banks, the IMF, the Bank for International Settlements, is not to pay the debt down, but to fundamentally change the definition of money itself. Their proposal is the digital hammer that will permanently silence the old system. Central bank digital currencies, or CBDCs. CBDCs are not cryptocurrencies like Bitcoin. They are centrally issued, centrally controlled, and programmable. They represent a direct liability of the central bank, replacing commercial bank deposits and, crucially, cash. Proponents paint a picture of utopia: instant, frictionless payments, the elimination of financial crime, and targeted stimulus that can be precisely deployed and instantly retrieved. But let's look deeper. A CBDC means that every single transaction you make is recorded on a ledger visible to the state. It eliminates financial anonymity entirely. It also introduces the terrifying concept of programmable money. Imagine a currency encoded with rules, money that expires if not spent by a certain date to force consumption, money limited to purchasing specific goods, or money that can be instantly revoked for what the state deems unacceptable behavior. This isn't hyperbole. Leading figures in global financial governance have openly discussed these capabilities. The transition won't begin with a catastrophic crash. It will be a series of strategic maneuvers. The first move is the slow, deliberate elimination of physical cash. Globally, nations are setting caps on cash transactions, removing high-denomination bills, and quietly reducing the availability of ATMs. The pandemic accelerated this shift, framing physical money as a relic, maybe even a hazard. But the real goal is to remove the last bastion of true financial privacy. Cash is the only form of money that exists outside the digital banking system, outside the direct surveillance of the state. Its removal is the precondition for the universal adoption of CBDCs. The second move is the integration of these new digital currencies with existing identification systems. Your CBDC account won't just be a bank account. It'll be inextricably linked to your digital identity, your social credit score, your travel permissions. The financial grid becomes a social grid. This reset isn't just about currencies changing value. It's about the nature of human freedom changing form. It is the ultimate centralization of power, disguised as technical efficiency. The final, fatal flaw of the fiat system, its tendency to create infinite debt and massive instability, is being leveraged as the justification to create a system of infinite control. This quiet war is already being fought in labs and legislatures around the world. China's digital yuan is a test case, a living laboratory for the perfect intersection of digital finance and social control. Their system already demonstrates programmable functionality, setting a global precedent for what is technologically possible. In the West, central banks from the US Federal Reserve to the European Central Bank publicly maintain they are only exploring a CBDC, yet internal documents and high-level speeches reveal a clear accelerating intent. The justification is always the same: if we don't lead the digital transformation, another power, namely China, will set the global standard. Or, decentralized cryptocurrencies will destabilize national sovereignty. It's a classic manufactured dilemma, a choice between two forms of centralized control, with the individual's freedom being the silent sacrifice. The biggest hurdle to this digital transformation is not technology, but public trust. How do you convince a population to abandon the only form of private money they've ever known? You do it through a crisis, a financial earthquake so profound that the population, wary and panicked, welcomes the new system as a savior. The economic fundamentals are already lined up for this event: unprecedented inflation, fractured global trade, escalating geopolitical conflict, and a global banking sector teetering on a mountain of derivatives. When the next collapse comes, the CBDC will be presented as the stable, secure, unhackable solution, the digital lifeboat to escape the sinking ship of fiat currency. And in that moment of fear, people may trade their last shreds of financial autonomy for the illusion of safety. The reset is not a prediction. It is a trajectory, an unfolding narrative engineered by the very forces that stand to gain the most from absolute control over the world's money supply. The question is, how do we navigate a world where the power to transact is the power to exist, and that power is held by a select few? The answer begins with recognizing the true nature of the storm we are sailing in. We've talked about the why, the mathematical inevitability of a system built on ever-expanding debt eventually collapsing. But today, we need to talk about the how. How is the new system, the framework for central bank digital currencies, being rolled out right under our noses? How will they get everyone not just to accept it but to demand it? The entire strategy relies on one of the most powerful human emotions: fear, the fear of instability. Remember, 2008, the global financial system teetered on the brink, and what saved it? A colossal injection of public money, a multi-trillion-dollar bailout. But the architects of the new system have a different plan for the next crisis. It's not a bailout, it's a bail-in, and it's the shadow policy designed to completely erase commercial banking as we know it. Here's how it works. In a normal bank run, your deposits are insured up to a certain limit, and the government steps in to backstop the system. But under new global financial stability rules, in a severe crisis, your bank deposits can be legally reclassified. They're no longer your money. They become the bank's capital. They can be seized, wiped out, to prevent the institution itself from collapsing. It's the financial nuclear option. Now, imagine the scenario: a major bank fails. In an instant, the public sees their life savings, their checking accounts, simply vanish. The panic would be unimaginable. But waiting in the wings is the solution already prepared. The CBDC. The central banks will step forward and introduce their digital currency as the only safe, risk-free alternative. Unlike money in a commercial bank, a CBDC is a direct liability of the central bank itself. It cannot be bailed in. It is the ultimate safe harbor. The public, traumatized and desperate after seeing their savings wiped out, will rush towards this digital safety net. They won't see it as an instrument of control. They'll see it as the only thing that can guarantee their financial survival. This is an engineered transfer of trust, executed by capitalizing on raw, primal fear, bypassing years of debate. So, how do they get you into this new system? The mechanism for adoption is the digital identity stack. Picture a single, seamless digital key that unlocks your entire life: your health records, your passport, your driver's license, your voting rights, and now, your money. Governments around the world are aggressively pushing for these unified digital IDs. The CBDC will simply be the financial layer of this stack. The logic is brutally simple. You won't be able to participate in the new economy without a verified digital ID, and that ID will be the gateway to your CBDC wallet. It creates a perfect, closed loop: no ID, no money, no money, no commerce, no ability to function in society. This isn't just about offering a new way to pay. It's about making the old way, traditional money, completely non-functional outside of this new, hyper-controlled digital ecosystem. The greatest psychological operation in this entire reset is the war on cash. It's not a battle being fought in bank lobbies, but in the court of public opinion. Cash is being relentlessly demonized as the tool of criminals, tax evaders, and terrorists. Every headline you read about money laundering or illicit finance serves one critical purpose: to erode public trust in anonymous transactions, to make you question why we even need physical cash anymore. And when the public finally throws up its hands and asks that question, the central planners will have their prepackaged answer ready. The CBDC, they'll say, will solve all these problems by making every single transaction perfectly transparent and traceable. But what they call traceability is, in reality, total control. It creates a surveillance economy on a scale we've never seen before. Think about the implications for dissent, for free speech. If every dollar you spend is tracked, any transaction deemed politically, socially, or ideologically undesirable can be automatically flagged, frozen, or even reversed. A protest group trying to raise funds, a journalist trying to protect an anonymous source. In a CBDC system, the state has an instant financial kill switch against any form of organized opposition. It fundamentally rewrites the balance of power between the citizen and the state, making the government the absolute gatekeeper of your ability to participate in economic life. This reset isn't just happening within nations. It's a global phenomenon. A key piece of this puzzle is the move to replace the US dollar as the world's reserve currency. For decades, the dollar's status has allowed the US to export its inflation and finance its massive deficits. But now, major world powers are actively seeking alternatives. They're moving towards commodity-backed currencies or creating new trade agreements that bypass the dollar entirely. The IMF's special drawing rights, or perhaps a globally interoperable network of national CBDCs, could eventually replace the dollar as the foundation of world trade. This global financial reset is, at its core, a massive geopolitical realignment. The CBDC becomes the new battleground for the next century of world power. Whichever country or bloc of countries sets the standards for the dominant global CBDC will hold the keys to the future of the world's economic architecture. This competition, often framed as a noble quest for financial stability, is actually accelerating the demise of traditional, private money. Whether the world ends up with a Western CBDC model or a more authoritarian model like China's, the common denominator is the same: the complete elimination of financial privacy and the end of money as an instrument of individual freedom. The clock is ticking. We are moving towards a moment when the system we all depend on could simply evaporate, replaced by a centralized ledger that records not just what you own, but what you are allowed to buy, where, and when. The final act of this reset will be enforcement, the moment when adoption is no longer voluntary, but mandated. That is the cliff edge we must all prepare for. Thanks for watching. If this information is important to you, make sure to subscribe and hit the notification bell so you don't miss what's coming next. Stay informed, and stay prepared. We're in the final chapter of the global financial reset, and it's the most chilling one yet. This is the endgame, the transition from a controlled financial system to a totalized one. Today we're talking about the survival strategies for those of us who refuse to surrender our financial autonomy. The reset won't be complete until the final, definitive step is taken: the criminalization of alternatives. We've all seen the push to eliminate cash. That was just the first strike. The second, and far more dangerous one, is the systemic attack on decentralized digital assets, specifically the true, permissionless cryptocurrencies like Bitcoin. To the architects of central bank digital currencies, or CBDCs, Bitcoin is an existential threat. It represents everything their centralized plan seeks to destroy: decentralized control, verifiable scarcity, and most importantly, financial sovereignty. You see, a CBDC isn't just digital money, it's programmable money. It's money with rules attached, rules set by a central authority. Bitcoin, on the other hand, is a system of rules without a ruler. That fundamental difference makes them So, how will they attack it? The conflict will be framed as a regulatory necessity. They'll talk about a global crackdown on the Wild West of digital assets, using the familiar language of stability and consumer protection. It sounds reasonable, doesn't it? But look closer. New global standards are already being developed by bodies like the Financial Stability Board. The LL introduced the concept of a whitelist, a register of approved digital assets that conform to central bank visibility. This effectively turns crypto into a controlled, compliant shadow of the CBDC system. Any asset that resists this control will be aggressively marginalized. It'll be flagged as a financial weapon, a tool for criminals and terrorists. The moment you hold a CBDC, you are an immutable part of the central banking system. You don't truly own it, you are granted permission to use it. This gives the central bank an incredible power: monetary policy on demand. Not as an abstract banking penalty, but as a deliberate, visible subtraction from your digital balance every month, designed to force you to spend and prevent you from saving. Your savings are no longer a buffer for your future. They become a tool for macroeconomic stimulus, or imagine instant, sector-specific capital controls. The government could, with the flip of a switch, prevent your digital money from flowing into areas they deem inflationary or speculative. Want to buy more than your allotted amount of gasoline? Transaction denied. Trying to invest in an asset class they disapprove of? Transaction denied. This isn't just a change in currency, it's the ultimate tool for social and economic engineering, a level of control never before seen. Your money stops being an expression of your labor and becomes a tool of the state. So the critical question becomes, how do you survive this digital lockdown? Tangible assets become the new currency of freedom. This obviously includes physical gold and silver verifiable commodities that cannot be frozen, hacked, or programmed by a central authority. Their value has been recognized for millennia for this very reason. But more critically, survival means a return to decentralized, permissionless technologies. The future of financial freedom will rely on us developing and utilizing truly decentralized networks, the ultimate anti-fragile peer-to-peer systems that can operate entirely outside the jurisdiction of central authorities. This is where Bitcoin and other truly decentralized projects come back into the picture. Not as speculative investments, but as tools of liberation. The final act of resistance is the cultivation of true, verifiable wealth, divorced from the central bank's digital ledger. This means supporting parallel economies. It means using privacy-enhancing technologies. And it means understanding that in this new era, your data is the new gold, and your privacy is the ultimate expression of value and freedom. This global financial reset is not an accident. It is a design. Its roots trace back to the quiet removal of the gold standard in 1971, which untethered currency from real-world value. It accelerated with the massive bailouts of 2008, which socialized private losses and centralized financial power. And now, it's climaxing with the forced introduction of a totalized digital currency. This will mean the end of traditional money as we know it, the physical, private, unmonitored medium of exchange that has been a cornerstone of personal liberty. But this crisis is also a powerful lesson. It teaches us that true value does not reside in the promise of a government or the algorithms of a central bank. It resides in that which is scarce, resilient, and fundamentally outside the control of any single power. The fight for financial freedom is the final battle for personal liberty. By understanding the endgame, by seeing the pieces move on the board, we can begin to build the parallel structures necessary to thrive. We can prepare for a world where the power to transact is the power to exist, and where the greatest asset is not money, but autonomy. Thank you for watching. If this conversation is important to you, make sure to subscribe and share this video. The more people who understand what's at stake, the better our chances of preserving our freedom. Stay vigilant and stay informed.